Wonderful good day, ladies and gentlemen. London, Mainz and Money 2014, and I'm very proud and happy now to have here one of the most well-known experts in the world here, Frank Holmes, the CEO and CIO of US Global Investors, honestly also public listed company, and happy to talk to you, Frank, today.
It's great to be here.
How was your year so far? I think the year's ending quite soon, and it was very shaky.
It's a very challenging year.
Yeah.
You know, it doesn't matter if you're number one when everything's down. It makes it very difficult.
Absolutely.
In particular, the morale.
Yeah.
The morale of people, the morale of managers. The morale is when you have 4 years of a cycle being down. Last year we had 6 months up, 20% run, and then all of a sudden rolled over. So it's difficult in the people's emotional confidence.
Are you driving active hedging strategies in your funds for that?
Well, there's only so much you can do because you're mandated by a mutual fund of your investment objectives, and it's pretty well defined. It's like a soccer match. You know, the boundaries are well defined.
Yeah, that's great, like a soccer match. I like that. But no referee there on that, which is the
we have
bad
many
news.
referees in our business. We have more referees than players.
Yeah, that's right. Let's come to the precious metals. That's something what you like a lot when we read your weekly newsletter. What do you think about the situation today? What can come up with it? As $44 last night up, I think was a good turn.
Well, I think a lot of that had to do with short covering. I think there was a lot of shorting going into the Swiss referendum and just the pervasive negativity that's taking place. So I think that's what's in the marketplace. But what's important, as I've always written about and commented, is that there are two drivers for gold. One is the fear trade, the other one is the love trade. And the fear trade are interest rates. Are they positive or negative? That is, what is the inflationary rate? Take away the yield they pay you on a 10-year government bond, and that seems to have a huge reflection on gold prices. So when gold hit $1,900, it was the all-time greatest negative return on your money. Like if you bought any 10-year government bond, you locked in to lose money for 10 years.
Wow. Oh, Jesus, yeah.
So that's one.
Makes no sense, yeah.
Now it's positive. So you went from minus 3%. You're going to lose 3% over that 10-year period on your money locked in. Now you're going to make 50 basis points. So that reversal has taken gold from 1,900 down to under 1,200. It's just recognizing that. The other factor is the love trade. And the love trade comes out of Chindia in particular, where people buy gold for love. Any type of form of love, they give gold. Now, that's highly correlated to their GDP per capita. And since 2011, if you look at emerging markets, you can see they've been drifting down. And the GDP per capita has been declining. That's impacted the overall consumption of gold.
Yeah.
So now it was expected that this year it would change, and everything that took place with Putin in Ukraine started unraveling Europe, which then, because Europe has a huge trading partner with China, it had a contagion.
Yeah.
And it wasn't Ebola, it was financial Ebola. And all of a sudden you start to see the slowdown in China. Now China's dropping interest rates where they were rising, lifting them up into 2010.
Yeah, wow, that's amazing. So you're principally more positive on precious metals for next year, right?
Yes, I'm very positive. I think that everyone should have a 10% weighting and 5% in gold stocks and 5% in bullion or beautiful gold jewelry. And then you go to rebalance each year, because I've always written about in the US stock market, or if you're in Germany, you're in the German stock market, you should have a high portion of it. Look at what Porsche's done. We own a Mercedes. It's been a great stock. So you want to own platinum and palladium because that's what they're using as part of their cars. You also want these cars. So it's recognizing that, and you rebalance. So this year you made a lot of money in your car investments, and you can turn around and buy gold at a discount.
Absolutely, yeah. I like that. Let's switch from the precious metals more to oil. I think oil has been, also very shaky. Oil went down some $45 now from the top this year. What's your opinion on that?
Well, I think there's two factors. You know, the slowdown in emerging economies, the concern, does have an impact, and the deflation that's taken place out of Europe has an impact. But I also think it's geopolitical. And I think that Germany, and I think America, and the Saudis and the Kuwaitis want to turn around and position and weaken Putin's sort of aggressive behavior around the world. Not only is he the richest guy in the world, he wants to be the most powerful person in the world. So one has to always be careful of that. And I think that that's what's taking place. So with that, this drop in the price of oil is huge. Huge tax benefit to Americans.
Yeah.
You're talking about $1 billion a week of extra tax-free money for people to go spend. So consumption products. So in Europe, Pandora is a great jewelry company. Tiffany's has been on fire as a stock. You know, we've seen the 52-week highs. When you take a look at China, India, Indonesia, all these companies have been, these countries have been supporting with helping the poor with oil prices, and so now all of a sudden they don't have to worry about that. So there's a huge economic boom. It's a big tax break. Now the Middle East is going to go through some challenging periods the next year, but you're going to see a huge tax benefit trickling around the world.
Yeah, that's right. Well, what they lose in the oil price, that's what they gain possibly in their share holdings.
Yeah, so the shale will come off, but I think that's just all temporary.
Yeah.
But I think it provides a good opportunity for investors to take a look at between now and February, historically oil bottoms.
Let's come to 2015. What would be some of your, let's say, top picks or top branches you have in the focus? And what do you think could be hot for next year, like commodity-wise?
I think the U.S. is going to continue to be quite strong. I think that the car industry will be strong. The people that supply the parts will be strong. I think the financial sector, once the G20 stop attacking every bank in the world, then you'll see a huge change in the financial sector. So I remain positive. And now when it comes to the specific commodity companies, one has to take a look at those throwing off free cash flow. And there's not many in the oil space that actually are throwing off free cash flow. When you want to look at America and buy MLPs, that's an infrastructure play, and you get nice yields with that. And I think you're going to have to live with low interest rates. We're going to deal with low interest rates. So looking for companies like German REITs, they're good investments. It's a real asset, and you're getting paid while you wait. So I think that that's an important part of looking at your investment portfolio.
Great, fantastic. Frank, thank you very much. All the best. Merry Christmas.
Thank
you. Let's keep fingers crossed for 2015.
Ho, ho, ho.
Great, thank you. Ladies and gentlemen, that was Frank Holmes, the CEO and CIO of US Global. And get paid until you wait. I love these sentences because that's exactly what really helps a lot with investments. And as I said, he sees the future still bright for 2015. Also, for commodities for the US. We will see what is going on. And all the best from London. Bye-bye.
Thank you.